Okay, is this the right time to get rid of Tesla? Is it time to sell your Tesla stock? Now, there's been a lot of controversy about Tesla over the past few days, few weeks, and probably the better part of a couple of months. Elon Musk has been stirring up a shit sandwich, and the stock price has definitely taken a toll. As you can see here on the screen on stockmvp.com, which is a software I helped to build, we have 51% over the past year loss of share value. That hurts. For a lot of investors in Tesla, including myself, that hurts. Over the past 3 months, this stock is down 48%.24. That's just a 3-month performance. You can clearly see when the fit hit the shan. Exactly when the Twitter deal happened, Tesla has started going downhill. So the question is that with everything that's going on, let's just focus on the stock, on the fundamentals of Tesla. Let's ignore the noise, the whole PR nightmare, the whole discussions, the controversy. Looking at Tesla as a standalone company, what do we think about the stock at this price? Currently trading at $156.80. If we go here to the MVP view we have over here, you can see that in pre-market, it's down 2.7% right now. 2.7%. Let me make the screen a little bit bigger so you can see what I'm talking about. This is the pre-market numbers right now. 2.8%. Ooh-wee. Down 2.5% yesterday. You saw the numbers for the better spot of the year. I mean, let's take a look at the fundamentals though. The share price is taking a beating. The market cap is down below 500 billion for the first time in a long time. So let's talk about the numbers. So right here on the screen, again, we're in stockmvp.com. This is a tool I helped create. We just crossed 900 members within a week and a half, which is super cool. I'll talk to you about the software in a second, but first of all, let's talk about Tesla. Look, we have these cards right here, and you can customize your own cards. You can go into this editor, and you can customize your own cards and put whatever you want here. This is the stuff that I chose for myself, but you can customize your own cards. Now, on the cards that I've chose, these are the metrics I'm looking at when I'm evaluating company, and Tesla included. Revenue, $75 billion. Nice. $10 billion is what they did 5 years ago. So 600% growth over the past 5 years. Over the past year, growth of 60% revenue. Over the past 3 years, 200% revenue growth. Naturally, I'm going to say that this is one of the areas that I don't see any problem. The company is generating massive amount of revenue. 11.2 billion of net income. Incredible. Year-over-year growth of 226%. Again, incredible. EBITDA growth 126% year-over-year. This is something absolutely incredible. Almost 3,000% over the past 5 years. As you can see here, they have $19.5 billion of cash. 6 billion of debt, but most of this is not real debt. I'll talk about it later in another video, but let's just assume that it is for the sake of the video, for the simplicity, right? So way more cash than debt. I think everybody can agree to that. A price to sales ratio of 6.5, 6.6, and assets to liabilities, double assets to liabilities. It kind of checks the box as far as what good fundamentals look like, right? More cash than debt, significantly, right? Here it's like 3 times more, a little bit more actually. Double assets and liabilities, positive net income, right? Growth up to wazoo, EBITDA growth over the past year, 126%. So clearly this company has very strong fundamentals. The problem with this company and why you've seen the spike, or rather the drop-off, is what's going on with the insiders. Now, this is our dashboard here where you can see insider sales. And as you can see right here, if we scroll down, Elon Musk, he sold a lot of shares. Whew, he sold a lot of shares. That's not even funny. $3.5 billion of shares. There's a series of sales here. You can see all the sales on the website. And yeah, it ain't pretty. It continues, by the way, all the way here. The other problem with this company, look, you can actually see insider selling, but also you can see institutional holding. Look, 44%, 45% institutional holding for a company like Tesla is way, way too low. Anything below 60% is very, very low. And institutional investors do not like this company, and that's keeping the share price down. And until institutional investors won't be convinced that this is a good deal, they won't jump in, and the share price is not going to pick up. So Gary Black talked a lot about it. I talked a lot about it. They need better corporate governments. This Twitter thing needs to blow over. A lot of things need to happen. But assuming right now, let's go super, super cautious, because let me show you something, right? Let's look at our DCF evaluator. This is our DCF model right here. We can run this on Stock MVP. And let's just run something very simple. You just saw, like, EBITDA growth is like 130% year over year. Let's do 35% EBITDA growth year over year. No, let's just go super, super cautious. And let's do 10% depreciation and amortization growth, 10% CapEx growth. Let's calculate. Let's give it 10% discount rate, 4% long-term rate. Okay, so right now, based on these super, super, super conservative assumptions, as you can see them on the screen, I'm going to make it bigger so you can see it, right? 35% EBITDA growth, which is way below what they're growing, 10% depreciation and amortization growth, 10% CapEx growth per year, 4% long-term rate, and 10% discount rate. The numbers on the left as well. Based on these numbers, this is what we're getting. Current share price, $156. DCF value, $227, which means the upside here is 45%. The stock, despite what you want to say about Elon and his behavior and his erratic behavior, Tesla, based on a super conservative model, just based on the fundamentals, if you ignore the noise, if you ignore the Elon drama and all that stuff, just Tesla on a standalone basis is undervalued by 45% as it stands based on our most conservative model you can think of. So, again, if you want to look at the fundamentals and not look at what's going on around the company, that's what it should be trading at, the $220. Now, will I be sitting here and telling you that, these things are the company don't impact the share price? No, obviously they do. And until Elon figures out a way to solve these issues, it's going to be a problem for the share price. But I just wanted to come on here and show you that this company is way undervalued and there's still a lot of upside here. And for a lot of people, this is an opportunity. For a lot of people, it's not. That's fine. It's just my opinion. It might be inaccurate, might be wrong, might be relevant amendment. You got to own research, do your own research. This is not financial advice, obviously. Now, the tool I've been using for this review is called Stock MVP. This is a tool we've built, me and my partner, Pete. Obviously, part of the purpose of this video is to promote this tool. Of course, this is a business. We're trying to get people to sign up. First 1,000 people to sign up are considered founding members, so they get 50% off for life. And we're now at 900 people, so there's 100 more spots left if you want to sign up. After that, I think it's $20 per month. And in any case, you have 14 days to try this with a refund, no questions asked. If you don't like it for any reason, even if you don't like it after a month, email me. I'll get you a refund. Don't worry. Test it out, try it out, and let me know what you think about Tesla stock. I know that Pete doesn't really like it that much. I have a contrarian view. Go check out his video on this channel as well. I'm going to link it below.